Why are valuations for gold miners and silver miners at really near historic lows right now? We're here to discuss this and explore valuations with the expert on gold and silver junior miners, David Erfle of the juniorminerjunkie.com. David, welcome back.
Thanks a lot, Dave. Thanks again for having me on.
We spoke a few months ago and you had recommended a few stocks that you like. We'll talk about those again this time and revisit your call. But first, I'd like to talk about valuations of the space as a whole. If you look at this chart, the XAU, which is the Philadelphia Gold and Silver Index, versus gold, it's trading at near 2016 levels, which was the low over the last 30 plus years. And so I wonder why, compared to gold, the silver and gold miners have not picked up as much as they probably could have.
Yeah, that's a great question, David. That's asked by a lot of people, and it's a multifaceted answer. First of all, you've got quite a bit of dilution in a lot of these companies, which need to raise capital for their operations. So you have to factor that into it. You've got record equities prices that continue to go higher. So people view miners and especially juniors as higher risk. So they say to themselves, well, the stock market continues to go higher. Why should I put my money into these risky stocks? And also you've got the gold price, which has been consolidating for the past 6 months. The gold price ran up to over $2,000 an ounce in a parabolic fashion. Mm-hmm. So that is in the process. That move is in the process of consolidating, and that 1,800 level on the gold price is a very important level. It was very strong resistance back during the first leg of this secular bull market that began at the turn of the century, and now it's becoming strong support. So. But as you say, the miners and especially the juniors are very cheap in relation to the gold price. Herein lies the opportunity in this sector.
Well, if you take a look at this chart that we're showing now, if you just zero in on the last year, you'll notice that the chart has been sloping up, meaning that the XAU has been climbing faster than gold over the last year or so. And we've seen that last year, the miners have outperformed gold. The question is obviously, can it continue to outperform gold in a bull market?
Well, absolutely. And if you go one step further, if you take a look at the GDXJ, which we know isn't really representative of juniors, but it is representative of the mid tiers, scattered with some majors. But if you take a look at the GDXJ to gold ratio, I think that's made a recent double bottom last week when you started to see the juniors show relative strength to the gold price as the gold price was going down below 1,800 on Thursday. And down $50, the miners pretty much yawned at that move, and especially the higher risk juniors.
Okay. Now, what I'm curious about is whether or not the move in junior miners is proportional to the move in gold. So, for example, if you take a look at this chart again, you'll remember that in the last 9 years, from 2012 to 2019, basically, gold has been trading pretty much range-bound and flat. And so during that time, the chart has sloped downwards as gold miners continue to lag behind gold. Now, the risk here is that, as we've seen since August, gold has not gone anywhere. It's sort of just been consolidating downwards, flat. So the concern from investors is whether or not the gold miners will follow suit and just stay flat, if not trend even lower because of the higher beta. What do you think?
Well, I really don't think so. The miners are historically cheap, especially in relation to equities. They're 50% cheaper. If you go by John Hathaway's figures on Kitco a few weeks ago, and the miners are even cheaper. But what's even more bullish is the fact that these juniors, they've all been cashed up now. And that's another reason for them lagging was the dilution that it cost them to cash up. So a lot of these private placements became free trading recently, and now they've been factored into the price and the sector. So a lot of these companies that are de-risking high margin projects with great management teams in top tier jurisdictions are presenting really good value.
So David, you brought up a good point, which is comparing the juniors to the broad equities index. So if you look at the S&P 500 index, for example, the trailing 12-month PE ratio is at very high levels, close to 2007 levels. And so my question is, why why is the gold mining sector so cheap, especially if you consider that last year there was so much more interest from generalist investors following the surge in gold prices? Remember, it was relatively easier for miners to raise capital in 2020.
Well, I think a lot of the answer lies in your question and what I touched on before. This is a very small sector, and people consider it very risky. The mining stock's very risky, especially juniors. And if they're gonna continue to make money in a rising equity market, they figure, why should I put my investment into these risky juniors, these risky gold miners?
Right.
I think this is a big reason why they remain undervalued, and also the fact that a lot of other sectors are kind of stealing gold's thunder here, as Bitcoin is one. But like I said, this consolidation process has lasted long enough. It's gone on in time and price close to historic numbers. So it's a really good idea if you're a contrarian, and to make money in this sector, you have to be a contrarian.
Okay.
You have to buy when these things are really cheap, like right now, and then take some profits on the table when they become expensive, like they did in August when the gold price got to $2,089.
Well, let me posit this contrarian viewpoint to you, and I'd like to see your response to this. Perhaps it's not, if you just take a look at the XAU to gold ratio chart again, perhaps it's not the fact that gold and silver miners are undervalued. Maybe they're fairly valued. It's just that gold is too expensive right now.
Oh, that's a good question. But if you take a look at the macro situation going on right now, I don't believe that at all. I've never seen a more bullish environment for the gold price that we see right now.
Okay.
We've got a Fed balance sheet that's going over $7 trillion now. We've got new President Biden is about to pass this $1.9 trillion stimulus package that looks like all systems are go on it. We've got a Federal Reserve that continues to stimulate the economy with quantitative easing. So, and we continue to see people losing faith in all central bank currencies. The gold price is rising in all currencies, and that looks set to continue.
Yeah, maybe what we need is for the Wall Street Bet Group to push up stocks like they did with GME and AMC.
Well, I'd much rather see gold, especially the silver price, go up on its macro fundamentals as opposed to somebody trying to manipulate the price higher or lower. As far as I'm concerned, it was nice to see that fail at the strong resistance at $30 in the silver price, because, like I said, I'd much rather see it go up onto fundamentals, nice and slow and steady. Because once you have a blow off top in a commodity, and especially silver, it's going to ruin that market for quite some time. I mean, when the Hunt brothers were successfully manipulated the silver market back in 1979, they ran it up to $150 an ounce in nominal terms, and that pretty much ruined the silver market for over 20 years.
You use the word successfully. Ran it up. Why did you stress that they successfully did it? Are you suggesting this attempt had failed?
Yes. I believe it has. I believe it has. And
okay.
Because
and what was the difference? What was the difference between the 80 and 1980 and now?
A big one was the margin requirement. The rules were not in place at the COMEX at the time, and they put the rules in place afterwards. So what happened this past Monday when the silver price was ran up to over $30 on huge volume, right after the COMEX closed, the CME came out and raised margin requirements 18%. So that raised you had to put $16,500 as opposed to $14,000 for a silver contract. That's quite a big raise. So that knocked the price down.
Okay. Now I brought up Wall Street Bets and the silver squeeze. Well, first of all, the Wall Street Bets community has denied that they were involved in the short squeeze for silver. Let's just set the record straight on that. So they've come out and denied any involvement there. But regardless, we have seen silver stocks move up a lot last week on the squeeze. We don't know who's been pushing it up, but if you look at things like Wheaton Precious Metals, Kootenai Silver, CEO I interviewed. A lot of these silver stocks are shot up, and of course they came back down subsequently as silver, flatlined. So I do think that if there is an attempt to squeeze up the silver market, the miners are the way to play it, not the bullion market.
Absolutely. I couldn't agree more. And fortunately, I was already properly positioned when this took place, but I did not chase any of the stocks once it did take place, because it was obvious to me that it was going to fail, because you saw black distribution candles on the 3 days that the silver price started to go up: Thursday, Friday, and then Monday. So whoever it was that was able to get the silver price up in the retail sector, big money came in and knocked it back down.
Okay, well, we'll investigate more as to who was involved and why. But let's, go back to valuations to close it off here. Before I joined Kitco, I worked as a macroeconomics researcher, and one thing that one of my managers taught me is that valuations are a very, very poor indicator of where prices are going to go. So even though valuations, should I stress, are cheap for the mining sector, it doesn't necessarily mean that prices will reflect upwards. And so I wonder what this means for investors. Is now a good time to be buying in, or should you wait for gold to break up even more? What do you think?
I think it all depends on what your view of the gold price is going to be in the near term. If you believe that the $1,800 level is going to hold, like I do, I mean, we've had 3 consecutive quarterly closes above $1,800. And I think that gold is carving out a strong base there, which once was strong resistance back during during phase 1 of the bull market that I mentioned that ended in 2011. Mm-hmm. So if you believe that the gold price is carving out a bottom here at 1,800, the valuations will catch up, especially once the gold price gets back over $2,000.
Okay. And finally, can you close off by revisiting your calls where the stocks that you talked about last time and the stocks that you prefer?
Oh, sure. I believe the 3 stocks that I mentioned at the end of last year to your listeners was I gave you a growth-oriented producer, a developer, and an earlier stage exploration company. The growth-oriented producer, your viewers are familiar with. You interviewed the CEO, Darren Blasutti, of America's Gold and Silver. I think that's a very good turnaround story for this year. I like turnaround stories because you can get them cheap when they're turning the company around. The second one is a silver developer, Discovery Metals. I think it's one of Eric Sprott's biggest positions. I think they've got like 80 million cash right now, and they're highly leveraged to the silver price. And the earlier stage exploration company I gave you was Probe Metals, who's exploring in one of my favorite jurisdictions, which is the Val-d'Or area of the Abitibi in Quebec. Okay, and just overall sentiments in the Quebec region, is that jurisdiction seeing high growth right now? Absolutely. Yeah, I did my column on Kitco brought that up a few weeks ago. It's really starting to heat up. Eldorado Gold just took over QMX in Val-d'Or. Earlier, we had Yamana Gold, which I believe you'll be speaking to the CEO here, Peter Maroney, coming up. Mm-hmm. They took over the Monarch Gold's Wasamac project, which is also in the Abitibi near Val-d'Or. So that area is one to watch, I believe, in the future, in the not too distant future, because it's really starting to heat up. All right. Thanks very much for your update, David. I appreciate you coming on today. Thanks very much for having me on again, David. Always great to talk to you. Always great to speak with you too. And thank you for watching. I'm David Lin. Stay tuned for more on Kitco.